Study like there is no tomorrow, because if you keep putting off your studies for tomorrow, you will probably too late. With this very noble thought, let's start today's lesson. I'm your accountancy teacher, Mr. Sunil Kumar. Hope you all are doing great at home. For this chapter, Accounting Equation, let's recap what we have learned in the previous classes. There are three most important terms for doing this chapter. These are as follow. Number one, assets. Assets are the resources that the business owns. They refers to the property or legal right owned by the business, which can be measured in terms of money. Example, land, building, gold, etc. Assets means the property owned by the business, and assets helps them to multiply their capital or multiply their money in future by the process of production. Number two, liabilities. Liabilities are the obligations or financial obligations of an enterprise other than owner's fund or capital. Examples of liabilities are loan from banks, bank overdraft. It means when there is less money in your account but you withdraw more money from the bank. This is all because of your good terms with the bank. Creditors, these are the person from whom company has taken goods on credit, and they have to pay, company has to pay money to the lender in future. They are known as creditors. Third, capital. Capital is the amount invested by the owner of the business. Whosoever is the owner, when he starts the business, he puts in some assets, some amount of cash, that is known as capital. So, hope you all understood what are these terms, three terms, and these are very, very important for this chapter. We can also express accounting equation in mathematical way. This can be expressed as follows. Number one, assets are always equals to equities. Now, what are equities? Equities means capital plus outside liabilities. Capital is the amount invested by the owner of the business at the time of commencement of the business. When you are going to start the business, whatever the amount invested by the owner is called capital. It is also known as internal liability. Outside liabilities mean when you borrow money from outside agencies like bank, loan taken from bank, loan taken from financial institutions, creditors, bank overdraft, etc. are the outside liabilities. So when we add capital and outside liabilities, it always becomes equals to the assets of the firm. Number two, assets are always equals to liabilities plus capital, which is already explained in the first topic as well. Number three, liabilities. Liabilities equals to assets minus capital, as in number second equation, assets equals to liabilities plus capital. So we can use this equation and can find out liabilities also. So the new formula becomes liabilities equals to assets minus capital. In the same way, fourth formula, that is capital equals to assets minus liabilities. Again, this is based on second formula, that is assets equals to liabilities plus capital. If we have to find out capital, then capital equals to assets minus liabilities. So these are the four formulas which we are going to use in this chapter to find out or to solve our questions. In the diagram, we can see that assets, under the assets we have written own. Own means this is our own property. Assets are our own property. The legal rights of the assets lies with the owner of the property or the business. Liabilities plus equity. This is owed money which we have taken from outside. That is our internal liability. Owed, that is taken from other person. And it is an obligation which we need to return back in future. So liability is something which we need to return to the outside person who has lent this money to us in future. So on the basis of accounting equation, the formula of which is assets equals to liabilities plus capital. On the basis of this formula, let's solve one question. The question is, if the capital of the business is 70,000 and liabilities are rupees 40,000, calculate the total assets of the business. So let's start this question. Solution. First we have to write the formula, that is total assets equals to liabilities plus capital, which we have learnt in the previous slide. Now, what is given in the question? Liabilities are given, that is 40,000, and capital of the business are also given, that is 70,000. So we can easily find out total assets. So total assets equals to 40,000, that is liabilities, plus 70,000, that is capital, equals to total assets, which becomes 1,10,000. In this way, we can do this question and many other questions we can easily find out by using this formula. Here we are going to recap the treatment of income, expenses, and there are certain special cases in this chapter. Now first we will cover income. Income, number one, income earned and received. What will be the effect of income earned and received in accounting equation? In accounting equation, income earned and received will increase the cash and increase the capital as well. Number two, income earned but not received. It is an asset, so it will increase the assets and increase the capital as well. Number three, income received but not earned. It is a liability because you have received the income but actually you did not do anything to earn this income. So it becomes a liability for the business. So its effect in the accounting equation will be, it will increase the cash and simultaneously increases the liability of the business as well. So these are the three cases of income, which how they will put their impact on the accounting equation. Now we cover expenses. Again, the expenses also have three different aspects. Number one, expense paid. So expense paid will decrease the cash and decrease the capital simultaneously. Number two, expenses outstanding. Expenses outstanding is a liability. It will increase the liabilities and decreases the capital. Number three, expenses prepaid. Prepaid expense is an asset of the organization. It will decrease the cash because something has been paid and it is paid out of cash. So it will decrease the cash and it will simultaneously increases the assets of the firm because prepaid expense is an asset of the business. So these are the three cases of expenses and their effects in accounting equation. Further, there are three special cases. Number one, interest on capital. interest on capital, it will be first added with the capital, then deducted from the capital. So it will cause no effect on the accounting equation of the business. Number two, interest on drawings. Again, interest on drawing, first we will add it with the capital and then deduct it from the capital. It will also not cause any effect on the accounting equation of a business. Number three, depreciation. Depreciation is an expense, so uh, but it reduces the value of assets. So it decreases the value of assets and decreases the amount of capital. So these are the three special cases, and we have seen these all items and their effect on accounting equation. This is already done in the previous classes. It is just recapitulation of the items and their effect in accounting equation. Here is question number 2, by which we will learn how to do practically accounting equation. Here question says, develop an accounting equation from the following. Number 1, Monica commenced business with cash rupees 50,000. Second, purchased goods for cash 30,000. Third, purchased goods on credit rupees 20,000. Sold goods costing rupees 10,000 for rupees 12,000. Bought furniture on credit rupees 2,000. Paid cash to a creditor 15,000. 7. Salary paid rupees 1,000. 8. Charge depreciation on furniture at the rate of 10%. Now here the amount of furniture is not given, so we have to look into the amount of furniture which is in transaction number 5. The amount of furniture is 2,000. Now we have to calculate depreciation on 2,000. 10% of 2,000 is rupees 200. Ninth, additional capital introduced, that is 20,000. 10th, commission received in advance rupees 5,000. 11th, paid income tax rupees 2,000. And the last one is 12th, paid for furniture rupees 1,700 in full settlement. Now we have to pay for furniture how much? That is in fifth transaction amount 2,000. Instead of 2,000 we have paid only 1,700. It means rupees 300 is the amount which we received as discount. That is our income. So these are the 12 transactions we will do in accounting equation. Here is the solution of the question. We will draw three lines, three vertical lines. First we will write number, then transaction, then accounting equation, that is assets equals to liabilities plus capital. Number 1, transaction is started business with cash. So under the asset we will write cash first, and under cash we will write 50,000 with the amount with which we have started our business. And on the other side, liabilities plus capital, the cash and capital will increase simultaneously, so 50,000 will also be written under the capital. So the equation is balanced here, assets equals to liabilities plus capital. So assets cash, that is 50,000, liabilities 0 plus 50,000 equals to 50,000. Number 2, purchase goods for cash. Now we are going to purchase some goods against the cash. When you buy some goods against cash, it will reduce your cash. So here we had 50,000 cash. Now we bought goods for cash 30,000. 30,000 cash will reduce, and new asset stock will create it. So 30,000 cash reduces, at the same time stock of 30,000 will increase. So on the other side, liabilities, that is creditors, 0. There is no effect on capital. So we will add first and second transaction. It will give us new equation. Now the new equation is 50,000 minus 30,000 gives 20,000. Under stock, 0 plus 30 is 30,000. Furniture, 0 plus 0 equals to 0. On the other side, that is liabilities side, under liabilities, creditor, 0 plus 0 equals to 0. Under capital, 50 plus 0 equals to 0. So see the new equation, that is 20 plus 30 equals to 50. The equation is balanced. It means we have done the right equation. Now number 3, purchase goods on credit. Now goods purchased on credit, goods are stock. Stock will increase by 20,000. We will write cash, that is 0. There is no change in cash, so we will write 0. Plus 20,000, stock is increasing. Plus furniture is still, there is no change, 0. Creditors, now because goods are bought on credit, so creditors will increase 20,000. Plus there is no change on capital, that is 0. Now the new equation will be 20,000 plus 0 gives 20,000. 30,000 plus 20,000 equals to 50,000. That is, new equation is now 50,000. Old equation, under old equation, furniture is 0 plus 0 equals to 0. Now creditors, old equation 0 plus 20 equals to new equation, that is 20. Capital, in old equation there is 50 capital plus 0 equals to 50. So 20,000 plus 50,000 equals to 20 plus 50 is 70,000. So the equation is balanced. New equation is also balanced. So there it means we are doing right equation. Number 4, sold goods costing 10,000 for rupees 12,000. Now we have sold goods 10,000. The cost of goods is 10,000 and we sold that goods on 12,000. So stock will be reduced by 10,000 and cash will increase by 12,000. So under cash we have written 12,000. Stock is deducted. The item which is written in bracket, it means deducted. The stock is deducted 10,000. There is no effect on furniture. On creditors, no effect. That is why we are writing 0. On capital, plus 2,000, because the cost of goods or stock is 10,000. We sold stock of 10,000 for 12,000. So there is a difference of 2,000, which is profit. Profit is added with capital. So now new equation becomes old equation plus number 4th transaction, that is 20,000 plus 12,000. New equation of cash is 32,000. Stock, old equation is 50,000. Now 10,000 is deducted. New equation becomes 40,000. Furniture, there is no effect, 0. Creditors, old equation 20,000 plus 0 equals to 20,000. Capital, old equation 50,000 plus now there is a profit of 2,000. It becomes, capital becomes 52,000. Now we will equalize the equation. 32,000 plus 40,000 is 72,000. On the other side, 20,000 plus 52,000 equals to 72,000. The equation is balanced. Now number 4, bought furniture on credit. Now we have bought furniture on credit, so there is no effect on cash, so we will write 0. No effect on stock, we will write 0. There is effect on furniture because we bought furniture for 2,000. Okay, so now we are writing under furniture 2,000. The furniture is bought on credit, so creditor will also increase. We will write under the creditor 2,000. There is no effect on capital. Now the new equation will become old equation 32 that is under cash, old equation 32 plus 0 gives 32. Stock, according to old equation 40 plus 0, it is 40. Furniture, according to old equation 0 plus 2000 gives 2000. On the other side, creditors, according to old equation, creditors were 20,000. Now added 2000 gives 22,000. Capital, 52,000 plus 0 gives 52,000. So the new equation is cash 32,000, stock 40,000, furniture 2,000. Total is 74,000. Simultaneously, on the other side, creditors 22,000 plus 52,000 capital equals to 74,000. Equation is again balanced. Now, number 6, paid cash to a creditor. Now, we are going to pay cash to a creditor. We have cash 32,000. Now, we are going to pay cash to creditors, that is 15,000. 15,000 is written in bracket, it means we are going to pay, it is minus. So stock, there is no effect on stock, no effect on furniture, so we are writing 0 0. On creditors, we are paying to the creditor 15,000, so under creditors we are writing 15,000 under bracket, it means deducted. Capital, there is no effect on capital. So new equation after sixth transaction is old equation 32,000 cash minus 15,000 gives 17,000. Stock, there is no change, that is 40 plus 0 is 40. Furniture, that is 2,000 plus 0 is 2,000. Creditors, according to the old equation, there were creditors of 22,000. Now we have paid 15,000. 22,000 minus 15,000, we are left with 7,000. Plus capital, according to the old equation, we had capital of 52,000. Now there is no change in capital, that is again 52,000. So the accounting equation assets equals to liabilities plus capital after sixth transaction is tallied. Now, number 7 is paid salary. Paid salary, we are going to pay salary. It will reduce our cash. So cash is deducted 1,000. There is no effect on stock, no effect on furniture. On creditors, there is no effect. On capital, 1,000 will be deducted out of capital. So new equation will be cash. Old equation is 17,000 minus 1,000 is new equation 16,000. Stock, 40,000 plus 0 is 40,000. Furniture, 2,000 plus 0 is 2,000. Creditors, 7,000 plus 0 is 7,000. Capital, 52,000 minus 1,000 is 51,000. In this way, our equation, that is accounting equation, is balanced. This is a complete solution to the problem. The 7th, salary paid, we have already done in the previous slide. 8th one is charge depreciation on furniture at the rate of 10%. Now, depreciation on furniture, the cost of furniture was 2,000. So the 10% of 2,000 is 200. So we will see that is there any effect on cash? No, there is no effect on cash. Stock, there is no effect on stock. And furniture, yes, there will be some effect on furniture because depreciation means decrease in the value of fixed assets. Here the fixed assets is furniture. Now we are charging depreciation on furniture. Depreciation decreases the value of assets. Now it is 2,000. Depreciation is rupees 200, which is deducted from rupees 2,000. So it decreases the value of furniture by 200. Now According to the new equation, furniture is left with the organization at rupees 1800. Now, is there any effect on creditors? No. Commission received in advance? No. Capital? Yes. Depreciation is loss for the organization, so loss is deducted from the capital. So 51,000 minus 200, we are left with 50,800. Now, according to the new equation, there is no change in cash, so it is 16,000. Stock, there is no change in stock, it is 40,000. Furniture, 2,000 minus 200 gives 1,800. Creditors, there is no change, 7,000. Commission received in advance, there is no change, 0. Capital, 51,000 minus 200, we are left with 50,800 capital. Now this is the new equation. Now transaction number 9, additional capital introduced, rupees 20,000. Here, additional capital of 20,000 brought in cash by the owner. So cash is added, there is increase in cash 20,000, so 16,000 plus 20,000 is 36,000. There is no change in stock, so stock will be 40,000. Furniture, there is no effect on furniture, 1,800. Creditors, no change, 7,000. Commission received in advance, no change, 0. Capital, there is additional capital which is added with the capital, 50,800 plus 20,000, we are left with 70,800. Now 10th, commission received in advance. Commission received in advance means it's a liability. So we have to create one more column, commission received in advance. On the liability side, we have written. Now commission received in advance, commission is received in cash. So it is added with cash. 36,000 plus 500 is 36,000 plus 5,000 is 41,000. There is no change in stock, no change in furniture. There is no change in creditors, but commission received in advance is 5,000 added on the liability side. Capital, no change. So new equation is 41,000 for cash, stock 40,000, furniture 1,800, creditors 7,000, commission received in advance 5,000, capital 70,800. Next is paid income tax. Income tax is drawings because it is the personal expense of the owner which is paid through the cash of the business. So income tax is drawings, so it will decrease our cash. So it is deducted from cash 2,000. Then there is no change on stock, no change on furniture. Creditors, there is no change. Commission received in advance, no change. Capital, there will be a change because drawings decreases the capital. So it will be minus from capital 2,000. So the new equation is 41,000 minus 2,000 is 39,000. Stock 40,000. Furniture 1,800. Creditors 7,000. Commission received in advance 5,000. And capital 70,800 minus 2,000 is 68,800. The last one is paid for furniture in full settlement rupees 1,700. Now if we see that in transaction number 5 we bought furniture for rupees 2,000. Now we are paying for the furniture. Instead of paying 2,000, we paid only 1,700. Now 300 is the profit for the organization, or we can say we received discount. It's income for the organization. Now it is full settlement. So how we will do full settlement in question? Let's see. Cash, there is a decrease of cash 1,700. Stock, no change. Furniture, there is no change. Creditors. Now we bought furniture on credit, so we have, these are also creditors. We had to pay 2,000, but we paid 1,700. It is in full settlement, so the entire amount is minus from the creditors. So the total amount of furniture which we had to pay was 2,000, but we paid 1,700. When we are deducting from creditors, we have to deduct the entire amount because it's a full settlement case. We are paying less, but we are settling the entire amount. That is why the full settlement, in full settlement, total amount is deducted. So creditors minus 2000. Commission received in advance, no change, that is 0. Capital, no change. Now the new equation is cash 37,300, which is 39,000 minus 1,700. We are left with 37,300. Stock 40,000, no change. Furniture 1,800, no change. Creditors 7,000 minus 2,000. We are left with 5,000. Commission received in advance, no change, 5,000. Capital, no change, 68,800. So, new equation, which is after 12th transaction, is our answer. Cash, 37,300. Stock, 40,000. For Thank you for listening it very patiently. Tomorrow, we will be back with another topic. Till then, stay safe, stay healthy, and stay at home and study hard. Thank you once again.